My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. When will we stop rallying on the same old information? When will we stop being so greedy, start being a little more cautious? It's hard to tell because we keep getting such a good backdrop. The kind of backdrop that encourages investors to keep taking risks. Maybe too much risk. Even with today's pullback, Dow slipping 133 points, S&P backsliding 0.29%, Nasdaq losing 0.27%. The market's had a remarkable run this week. And what a week. We almost went to war, and then we didn't go to war. We almost didn't get a trade deal, and now we know it's coming next Wednesday. Then this morning, we were worried that the Labor Department's non-farm payroll report might come in too hot. If employment's too strong, that might wake up the Fed and force them to start publicly mouthing off about inflation. We got a bunch of Fed governors speaking next week, and that could have gotten real ugly. But what actually did we get? Well, how about a Goldilocks jobs number? One that was not too hot, one that was not too cold. You get that. And I've got to tell you, we created good jobs, but we had sub 3% wage gains, so the Fed should not be worried. It could have been a lot worse, especially since some of the shortfall related to a company's specific problems at Boeing, which just now said that the former CEO is not going to get severance. All right, the labor report was still one more reason to buy stocks here, and that's what happened this morning, before even the most raging bulls either ran out of capital or just got bored with endlessly buying the same old stuff or nothing new, and that caused the decline. Now, look, get this, though. The early spurt briefly allowed us to cross Dow 29,000. I know, not an important round number. I didn't see many Dow 29,000 hats on the floor of the exchange, although there were a couple. But it hammered home to people that this rally is increasingly about momentum, about movement, not about fundamentals. So I'm actually glad we got a pullback today, if only because it could help buffer the market against potentially sharper declines if the earnings start to disappoint that we hear next week. I hate it when stocks run going into earnings season. Any week this year will actually give the bulls a better setup. But next week is indeed when the rubber hits the road. Earnings season gets going, and we're going to find out whether the fundamentals can actually justify this market's magnificent move higher. With that in mind, what's in our game plan for this crucial first week that really matters in 2020? Okay, the week starts off with the fireworks of the J.P. Morgan Healthcare Conference. And this is something that, of course, we're going to. It's the biggest shindig in the industry. Remember, this conference is where Bristol Myers told us it was acquiring Celgene last year. This time, I'm expecting some startling announcements and new drugs that I'm going out there myself to find out about. I'll be reporting on it live from San Francisco. We are going to be talking once again to Dr. Giovanni Caforio. He's the CEO of Bristol Myers. Wow, that stock has moved since he bought Celgene. Hey, how about Emma Walmsley? She's the CEO of GlaxoSmithKline. See what these two incredibly important drug companies are up to. Tuesday, we hear from J.P. Morgan itself, the earnings for the bank. And this stock's been on a tear for months. I bet the numbers will be good. But will they be good enough to justify this move? I think it's incredibly difficult for any company to live up to such lofty expectations at this point, even a company as well-run as J.P. Morgan. The bar is lower for Wells Fargo and Citigroup, which will also report on Tuesday. I can't wait to hear what Charlie Scharf, he's the new CEO of Wells Fargo, has to say about how he's reinventing the business. I want to know if Citi will keep buying back stock now that it's had such a huge run. Is the stock too high for Michael Corbat, CEO, to continue to buy back 8% of the company? Now, speaking of inflated prices, we get results from Goldman Sachs on Wednesday. And look, I'm a big believer in the company that I worked for at one point in my career. I don't expect to hear anything so amazing that it will propel the stock higher, though. At least not yet. Goldman has a major analyst meeting at the end of the month. That might do the trick. We own this one from my charitable trust, along with Citi and J.P. Morgan. 3 positions we've had for ages, and I have to admit, I'm a little antsy about the results here. But that's only because the stocks have had such magnificent moves. I don't know if anything can live up to the expectations. Bank of America is under the same gun when it reports. The company's been putting up consistently good number after consistently good number, and its stock is finally being rewarded. Again, though, worried about profit taking. Remember, this is a continuing theme. You can hear the theme from me. I'm trying to be sure you get it. We also hear from United Health Group, UNH. This stock's been a scorcher. Ever since Senator Elizabeth Warren backed away from her more aggressive position on Medicare for All, which would have effectively put UNH out of business. No wonder it was in the low 200s. All of the worries about the Democratic primaries obscure the incredible success of this company. When you see the numbers, I'm thinking that you will get a positive beat and raise scenario for the year 2020. Now, aside from earnings, the big event next week is the signing of the Phase 1 trade deal with China on Wednesday. Once it goes into effect, I believe President Trump will roll back some tariffs in exchange for China making some major purchases of American-made goods. I think they're about to buy a huge quantity of pork. Maybe Tyson Foods will finally start getting its due. The stock at last had a nice move today. Thursday ends the big bank numbers, and that's with Morgan Stanley. Now, since this last report, this went off. Because, look, I mean, these report and then this report. People don't even think about this one. By the time it's just an afterthought. I wish if they were to report here, maybe I'll have to speak to James Gorman about it. I think it would do a lot better. It isn't fair. Morgan does a fabulous job. Sure, the stock hit a 52-week high today, but I still think it sells for ridiculously cheap 10 times earnings. This is an incredibly well-run bank. I think you can go higher, and if the stock sells off after the other banks report, so let's say these guys aren't that good, these guys aren't that good, so this stock is down, I think you want to buy some. That would be the best trade-off of next week. We also hear from PPG. They're on all the time, right? Especially chemical maker. Lately, the chemical stocks have been roaring as they've been able to put through some price increases. Polyvinyl chloride just had a price increase this week. PPG will give us the pulse of the group. It's been a juggernaut since October, although the stock has cooled of late. I bet they tell us a fine story. After the close, one of the great bellwethers reports. I'm talking about CSX, and that is the big railroad.
All aboard!
These guys, honestly, I don't know how their business is doing. It's difficult to tell. The rails have taken off, though, ever since the Fed started cutting interest rates. And it's been a pretty amazing move as these companies aren't actually seeing a big uptick in business. But there's been a big uptick in earnings because they've been making more money off of each train thanks to something called precision railroading. CSX has been a leader in the process, so I think it will please Wall Street when it reports. Friday, someone may not please Wall Street reports is Schlumberger, SLB, also known as Slob, the oil service titan. We need a NABF here. Not as bad as feared, NABF. And then a stock and rally. The problem is, I just don't know if it's possible to get anything positive out of an oil service company in this environment, even with the price of crude up substantially over the past week. Schlumberger gives you a 5% yield, though. I just want to be sure that management's committed to it and not worried about its size. Put it all together, next week could be make or break for this market after this run because the averages, well, you know what? I think they're too lofty given what we're going to see. I've spent all week talking about complacency, but also resilience. I'm hoping today's pullback will reduce the complacency quotient, but there's still too much of it. Bottom line, ever since we resolved the Iran situation, this market's gotten too gleeful for my taste. So my suggestion is tread carefully going into earnings season. We've tried to take something off the table every day for my charitable trust. I think you should do the same because this is a good moment for profit taking. Let's go to Richard in New York. Richard!
Booyah, Sir James. This is Richard from Jamestown, New York.
Fantastic.
Most notably the hometown of Lucy Ball in the National Comedy Museum.
I had no idea. She lived next door to me at one point in the 90s. Wow. I mean, she's just amazing. Amazing person in the 80s. It was 84. She lived next door to me.
Wow, she's a funny lady.
She was amazing.
Anyway, when I say long-time, big-time fan, you know, about 10 years ago when I started paying attention to you every single day, it led to it turned my financial life around.
Yes.
This led me to a rock-solid retirement that I thought would never be possible.
I think that's
fabulous. Thank you very much.
Thank you.
I love dividend stocks, and I know this is a bit speculative as I have my top stocks well covered. But tell me about ET, sir.
Look, they have the cash flow to maintain that dividend. But do they have the management smarts to grow the business? And the answer is they just keep thinking the only way to grow is to buy. So I am not going to recommend Kelsey Warren and ET. I'm sorry. I'm a more conservative guy. I can do EPD, but I can't do that one. But great, and thank you for those kind comments about the show. Let's go to Lewis in California. Lewis!
Mr. Cramer.
Yeah.
A big booyah from sunny Los Angeles there.
Oh, God, I love L.A. What's going on?
My question's on Eli Lilly. I'm up 16% over the last couple of months, and I'd like to know if it's time to take some chips off the table.
No, Dave Ricks is the real deal. I mean, the stock
more.
was up a lot today. I totally get that. I know I'm probably being greedy with Lilly, But Dave Ricks is so good. You need a pharmaceutical. They are great. And I think that the stock's going to keep going higher. Sure, there could be an air pocket, but all I would do is pound the table if you got one. Thank you. How about Craig in California? Craig.
Is this Jimbo?
You bet it is, partner. What's up?
Yeah, it's the ski daddy Swami of the stock market.
You
the
betcha.
Guru of gains.
You betcha. Also known as Jimmy Chill. What's up?
I've got a stock name. I've got a question for you. I've been following this about 10 years. Keeps rocketing higher and higher and higher. Big name. Nobody on the street's talking about. I'm wondering how high can this stock go, and what kind of multiples should be placed on? One of the quickest and easiest ways to find out if you've been a victim of identity theft is by doing a quick credit check. Does this bode well for Fair Isaac, FICO?
Fair Isaac's it's like Kleenex, right? FICO is like Kleenex. It's just part of our society. And that's why this stock can keep going higher. I'm a believer in fintech. I'm a believer in Fair Isaac. It's kind of like owning S&P. There's just certain companies that are just fantastic to own, and MSCI, Fair Isaac's one of them. You got a good one there. All right. Now, tread carefully going into earnings season just because I'm a little concerned. I mean, think about it. 100 in the high 130s, and it used to be much, much lower. Citi just had a very big run. Goldman's had a run off of 180. I'm a little nervous. Not a bad time to take some profits. On Mad Money tonight, what could the recent geopolitical tensions with Iran mean for the oil market? I'm talking to the CEO of Parsley Energy to find out. Sweet spot, Permian. Then, the big tech names are once again surging, but what's behind the move? I'm offering an alternative take. And we're almost done with a busy week, but before we wrap up, I'm checking back in on one of the major storylines of the week, CES 2020. Find out what's next when it comes to the self-driving cars that I know you care about so much with the CEO of Mobileye. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.